Good morning. It is 9 a.m. on Friday, March 18th. This is Yahoo Finance Live. I'm Julie Hyman along with Brian Sazi. And if we take a look at the futures here this morning, it should be interesting to see where we shake out on this Friday, because we are seeing the major averages poised for gains on the week. For the S&P 500, the largest gain going back to November 2020. But we'll see how the day does end, because right now futures are pointing to a lower open. Dow futures down by 0.5%, S&P futures off 2/3, and NASDAQ futures off by 0.75%. We should also mention it is witching day, triple witching day. Expiration of futures and options contracts can cause more volatility. But here are the three things that you need to know today. First up, right now, President Biden is scheduled to be beginning a call with President Xi of China. The topic, or at least one of the big topics, Russia's invasion of Ukraine. The Biden administration concerned that China may be moving closer to supporting Russia in the conflict. That's something the Secretary of State Antony Blinken has talked about. And he said that if so, that the U.S. will not hesitate to impose some sort of consequences on China. He said if China takes actions to support Russia's aggression. So that will be a topic of the call today. We don't know how long the call will last. We don't know exactly what will come out of it. We will be watching it for headlines, but it is the first call between the two leaders since a video chat on November 15th. And this call was arranged by the White House National Security Advisor Jake Sullivan, as well as a member of the Politburo part of the Communist Party, Yang Jiechi. The two met in Rome on Monday for a 7-hour meeting. So presumably that was constructive enough that they were then able to schedule this call. Meanwhile, we continue to see Russian shelling in Ukraine, particularly of civilian areas, and a Ukrainian city called Lviv, which has come under attack after being a relative refuge for civilians. That is in Western Ukraine. If you take a look at the futures on an intraday basis, we continue to see some volatility there as people are watching the headlines. And the background as well, Brian Sazi, for President Xi is that the Shanghai Composite and the Hang Seng have both fallen in recent days, recent months. And so that suggests that he is perhaps under more pressure. So that's something also that we're considering as we watch all of this, Saz.
Yeah, we've been saying it all week, Julie. It is amazing to see what the market has done this week. It has had an upside bias all week, despite Fed rate hikes, despite the ongoing situation in versus Russia and Ukraine. And now you have Wall Street, I would say, coming out, maybe perhaps trying to pick a little bit of a bottom. Looking at a note right now from J.P. Morgan's Marco Kolonovich, saying the commodity super cycle will persist, but the correction in bubble sectors is now likely finished. And of course, I think he's pointing to, Julie, that pullback in software names, that pullback in tech. So perhaps a JP Morgan coming out here and saying, you know what, despite all the risks that are out there, buying opportunities might be finally emerging.
Well, it looks like people have already been following that advice, right, this week, if you look at the action that we've been seeing. Thing number two that you need to know about this morning, earnings out from FedEx after the close of trading yesterday. FedEx coming out missing when it comes to earnings per share, beating by a hair when it comes to revenue. And the company blaming Omicron in part. CFO Michael Lentz saying it caused disruptions to our networks and diminished customer demand in January and in February. Now, FedEx, you might think a company like this would be affected by rising fuel costs, but in fact, it passes a lot of those on to customers in the form of surcharges. No, Brian Sazi, as you flagged to us this morning, what's really an issue cost-wise for FedEx has been what's going on with labor costs. That said, the company's adjusted operating margins did rise to 6.2% from 4.9% a year earlier, but that was still short of estimates.
Well, you can add FedEx, Julie, to the list of the growing list of companies that are putting fuel charges now, surcharges on their customers. Of course, Uber has, Lyft has this week. Now, those surcharges will kick in actually on my birthday, April 4th. And very complicated to understand what they are, but your packages will likely go up a couple dollars because of higher fuel costs. But I do want to mention this quote on the call last night from FedEx COO Raj Subramaniam. He said, quote, "We estimate the effect of Omicron-driven volume softness in our Q3 results was approximately $350 million. And it's just another sign that the pandemic is very much with us. It continues to impact big businesses. Sure, you might see the stock market rally after Fed decision day, but companies are still dealing with a lot of pandemic related pressures.
Yeah, although you would think that that would be sort of waning at this point, Saz, although who knows, we're bracing for another wave, it sounds like, with this BA2 variant. One more thing I wanted to mention is sort of the mix at FedEx. Ground unit volume was actually little change from a year earlier, which I think is really interesting. It sounds like some clients at FedEx were migrating to air freight because they sort of avoid some of the supply chain issues, the port issues and whatnot, by going in that way. So that's something that's interesting. But at the ground unit in particular, Morgan Stanley analyst said the miss there might be jarring for investors. So that's partially reflected in what we're seeing in the stock action. And then thing number 3 this morning is another earnings report, and that one from GameStop, the company reporting a loss. Analysts weren't looking for a loss at all. They were looking for a profit of 84 cents, revenue coming in a little ahead of estimates, and the company gave a tiny drop more details on its NFT marketplace. It says it's going to launch by the end of fiscal second quarter, but the shares are down 9%, Saz.
Yeah, well, you have to commend GameStop CEO Matt Furlong. Quarter over quarter, or sequentially, as analysts would say, he did hold a little bit of a longer earnings call. So this earnings call last night from GameStop, 10 minutes and 52 seconds. The one from the third quarter, a little over 9 minutes. So really, Furlong putting in those very long hours here and trying to articulate to investors what his plan actually is. And once again, Julie, I think you see in the market here very disappointed because really they're not getting what this company is going to do to turn itself around. Really a lack of detail, and frankly, it's very embarrassing. Also want to note this quote from Furlong. He said on the earnings call last night, "We know the investments and sacrifices made in fiscal year 2021 will take time to yield tangible value. We are completely comfortable with that." I'm glad he is, because investors continue to show that they are growing uncomfortable with that. But we'll talk more about this later.
You love to bait the GameStop fans. I'm sure
Just reporting what I know, Julie.
anticipating
This is the
I'm
news.
anticipating the tweets as we speak. So I look
I know
forward
they're
to
coming.
your
I know they're
interaction
coming.
with those folks. All right, let's broaden it back out now and talk about what we've seen this week, what we could see next. Sylvia Jablonski is with us. She's the CIO and co-founder of Defiance ETF. Sylvia, it's always great to see you. I want to start by picking up on the point that we were talking about at the beginning of this conversation, which is just how we have seen this sort of rebound in stocks and seeming resilience in the face of, yes, oil prices come down a little bit, but by and large, we've still seen a big move upward. The Fed's raising rates. There's still a war going on. What do you think that sort of resilience is coming from?
Hi, Julie. Good morning and great to see you. I think that we're in this state of range bound volatility that's going to continue, and the momentum to the downside is almost equal to the momentum on the upside. My sense of what happened this week is that investors are starting to see a tradable bottom here. You know, there's 2.7 trillion of savings sitting on the sidelines, and if you leave that in cash, you're essentially taking a loss because of inflation. So if you look back and look at some of these mega cap names like Apple, you know, at some point we saw a head and shoulders pattern there. S&P death cross for a hot second there. If you go back, it's 2008 that we're looking at when you had these opportunities to get in. So, you know, I'm not calling a bottom here, but I think we're definitely in some sort of tradable bottom range. And I think that investors with a longer term horizon are going to jump at the opportunity to get into some of these stocks, you know, finally. So that's what we saw this week.
Sylvia, tradable bottom. When I hear that, I think investors would be better served to ignore what's happening in Russia and Ukraine and higher oil prices. No.
Yeah, I mean, it's hard to sort of ignore it, right? Because that's the potential headwind, and that's the risk to all of this not playing out. You know, if things between Russia and Ukraine get worse, and they're, you know, arguably terrible right now, and you have this continued issue with oil prices and the pressures of